Hey Matt, thanks for joining me today. I have some questions I'd like to go over with you that my clients asked me. But first, can you tell me about yourself?
Yeah, so I have over a decade of experience in financial services and life insurance being one of those things. And I got into it because when I started being educated on this stuff, I was blown away and I thought no one else knows this information and they need this information. So I just really take an educational approach to what I do and much like you. So I appreciate you having me on the video today.
Absolutely. Thanks again. So I guess let's dive right in. One of the questions I'm asked a lot is, what is the difference between the various types of life insurance, such as term, whole life, universal, etc.? Which one is the best?
Oh boy, that is a loaded question and a question that there's a lot of debate, a lot of opinions about. There's TikTok videos, Facebook videos, so people are getting bombarded with information about these types of policies. But I think that the easiest way to answer that in a more broad sense, and then in different videos, I guess we can get into more detail about each different one. But in a broad sense, the purpose of life insurance is when you have liabilities. These are debt, things that cost you money, and if you pass away, things that will cost someone else money. So if you've got liabilities and you have an absence of liquid assets, so just to specify, we're not talking about businesses and real estate, stuff like that that can be liquidated, but there's no guarantee of how long that would take or how much money you can get from it. And that's a lot of hassle. So that's not liquid. Liquid would be like money in a savings account, money in investments, money in a 401k IRA that you have clear beneficiaries set on. That's liquid assets. Okay. So in the presence of liabilities and the absence of liquid assets, you've got to do something to create an immediate financial liquid value of your life so that if you pass away, you're not leaving a financial burden on someone else. Now, if that flip-flops and one day your liabilities are down to nothing, which is what you help people accomplish. And if your liquid assets are very high, which is what I help people accomplish, now you're self-insured and you don't need life insurance. Okay. So that time period that we're talking about between having liabilities and not having liquid asset, there's a time period there. It's not indefinite. It's not eternal. It should not be for your whole life. Okay. There's a time. Okay. Or in insurance terminology, there's a turn, okay, that you have this situation. So the most cost effective way to get the highest amount of life insurance coverage for the lowest guaranteed monthly premium for that determinate amount of time is something called level term life insurance. Now, there's a lot of different types of term life insurance policies. Not all of them are level, but you want to be able to look and say, okay, for example, I'm going to have this liability, I think, for 30 years. So I need life insurance coverage for 30 years. Well, you get a level term policy where you get a determined death benefit that's immediately worth that amount of money, and it's guaranteed to stay the same price and the same value for that set amount of time. And that's the most cost effective way to buy it so that you can have more money in your budget toward paying off debt and building that liquid asset for the future.
Thank you so much. That's great information.
You're welcome.